I'm John Hanna for CDTV.net in New York, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Hey, Greg, how you doing?
Good day, John. How are you? I'm doing
Great,
well,
sir.
thanks.
Awesome. Now, Greg, tell us about the Market Week report.
Well, John, investors, really was trying to figure out last week which way domestic equities are headed. But last week, the indexes weren't being much help. The Dow Industrial have now made a round trip back to the 12,000 level since early February, and the S&P has bounced around in between roughly 1,300 and 1,340 during the same time. Though the large caps have recently begun to pull away from the Russell 2000 and the NASDAQ. And by week's end, the Japanese disaster had yet to have a substantial impact on U.S. equities, though we did see a slight rise in the 10-year Treasury yields. Year to date, through the end of last week, John, the Dow was up 4%, S&P up about 3.7%, NASDAQ up roughly 2.4%, and the Russell 2000 roughly 2.5%. So as you can see, the Dow and the S&P are starting to pull away a little bit. The large caps are in favor at this point. Of course, really what's on people's minds today is the Japanese disaster, the earthquake and the massive tsunamis that have hit the Japanese islands. Right now, we've got on March the 14th, 1:30 Eastern Time, the Dow is down 116 points to 11,928, so it's below that 12,000 mark. And then the S&P is off about 14, almost 15 points to 1,289. So we were seeing some weakness in the markets today, and so who knows where this is all going to end out? If this is the possibility of an aftershock in the financial markets based upon what's happened in Japan, but we are kind of breaking some of the key support levels as we speak right now. So only time will tell if this will be the onset of a potential correction that we've been expecting for some time, or if the markets will find support here and continue to build a base or rally higher. John, as we look at some of the headlines last week as far as the economy, some of the headlines that we hit last week were Moody's had some renewed anxiety over the Eurozone. It downgraded the Greek sovereign debt from a Ba1 to a B1, indicating it considers that Greek bonds are in danger of default in the future. Moody's also lowered the Spain's credit quality rating slightly from AA2 from AA1 to AA2, from a AA1. So still concerns over the Eurozone, or at least sparks reigniting there. Also, oil prices in January helped push the U.S. trade deficit to its highest level in 5 months. And so trade deficit increasing, though the Census Bureau said January's gap between exports and imports rose almost 15%. So from $40.3 billion to $46.3 billion. Though exports of goods increased by $4 billion, imports rose more than $10 billion. Chinese officials also said that the growth of exports and imports slowed there in February, resulting in an unusual $7.3 billion trade deficit. Also, February foreclosures were down 27% from the year before, according to RealtyTrack, and they attributed the decline to slower processing of paperwork by banks. So it's not so much that the foreclosure market is improving so much as it's just they're processing them much slower. So they were down 27% from the year before. 10 states accounted for more than 70% of the foreclosure filings, which fell 14% from January to a 36-month low. Higher gas prices didn't deter Americans from spending more in February. The Census Bureau said retail sales rose 1% from January and were up 8.9% from a year ago. And auto and vehicle-related sales were particularly strong, up 25.9%. John, as we look to the week ahead, investors will continue to assess the potential global economic aftershocks of the Japanese earthquake. Tuesday's Fed statement will be watched for hints of any change in future bond buying plans, while inflation numbers also will be of interest. So this week we're going to hear about import-export prices, which is on Tuesday. Also Tuesday, international capital flows, and of course the Federal Reserve Open Market Committee announcements. Then on the Wednesday, the 16th, housing starts and wholesale inflation. Then on the 17th, we have consumer inflation, industrial production. And then lastly, Friday will be a pretty busy day. We'll have a quadruple witching options expiration. So look for a lot of trading volume there. In the meantime, I'd be thinking of our in Japan and wishing that we can have some compassion on them. Be thinking of them, and what a tragic event this is.
And our thoughts and prayers as well with the Japanese quake victims as well. I'm John Hanna for CDTV.net in New York, and that's Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma.